The emergence of DeepSeek and its impact on industries, from hyperscalers to chip manufacturing, and even the power consumption implications of it, have already been thoroughly discussed here at Bloomberg Intelligence, and you can find the videos on our YouTube page. But one angle, perhaps, that is left to explore is that one from a capital provider and investor perspective. And perhaps for that, no better lens than looking at things through a SoftBank lens. So it's a good thing that today we have with us Chris Muckensturm and Sharon Chen, who cover SoftBank from an equity and credit perspective. So, Chris, I would start with you. What do you see to be the implications of DeepSeek into, well, the industry and then into SoftBank?
So let me probably give some background about SoftBank to start with. So SoftBank Group is a Japanese multinational conglomerate that has been founded in 1981. The company is best known for its vision funds launched in 2017, which rank among the largest technology investment vehicles globally. The company's net asset value amount to 29.3 trillion yen as of December. Other key assets that you might have heard of, obviously, SoftBank Corp, ARM, and T-Mobile. SoftBank emphasized long-term bets on disruptive technology and sort of serve to shape global tech trends, despite financial volatility. So as we've heard now, its latest focus is obviously on AI technology. Maybe let's just discuss more about the trend that we are seeing. So here we have two contrasting approaches. On one hand, we have the US tech giants focusing on creating bigger and faster large language models, regardless of cost, while Chinese researchers are taking an asset-light approach to achieve comparable performance. So the release of DeepSeek R1 model has effectively raised questions globally around the lasting dominance of tech giants LLMs. We think the growing popularity of DeepSeek's low-cost, open-source AI models means enterprises have begun to value the customization and cost-effectiveness of LLMs. The trend might turn AI into an affordable technology available to everyone, and in a way turning the technology into a commodity. DeepSeek is not the sole open source model developer. Meta has also focused on open source models with Llama, while other AI giants like Google and Alibaba have also joined the fray with cheaper open source version in addition to their proprietary closed LLMs. So what does that mean for SoftBank? So SoftBank's heavy bet on OpenAI, which focus on proprietary LLMs, could be a risky move given the market trends I highlighted just earlier towards low-cost open source models. We are concerned that OpenAI's return on invested capital could disappoint, failing to justify the current high valuation. Similar risk applies when considering SoftBank's reliance on ARM, which accounts for 50% of its asset value. ARM's proprietary chip designs are vulnerable to the challenge of open source RISC-V instruction set architecture. For context, the RISC-V market is expected to grow 38% per year to $7 billion by 2030 due to the advantage of high-level customization and greater use control without expensive licensing fees. It could also mitigate the impact of trade restrictions arising from geopolitics. We see tech giants included NVIDIA, Alibaba, Google, Qualcomm, and Samsung have begun transitioning away from proprietary microcontrollers. So with ARM's decision to develop chips in-house, we could see an acceleration of the market's migration to RISC-V, as it would prompt direct competition with customers and essentially reducing ARM's neutrality.
Well, thank you for that, Chris. Well, Sharon, if we're seeing these potential threat and competition from the open source models, what could be the implications from a credit perspective?
I think, needless to say, we think that the company's rising investments in AI is likely to have a negative impact on its credit profile, at least in the near term. And this could come mainly in two ways. So firstly, we believe that the portfolio quality for SoftBank may weaken. And as Chris pointed out, there's uncertainties around returns, especially after DeepSeek's latest model. And we could see an increased portion of the portfolio coming from these riskier unlisted investments that are largely unproven in terms of monetization. Secondly, and this is more from a debt perspective, we do think that at least some of the funding will come from debt, and this could weaken SoftBank's loan to value. although this company does have some rating buffer. Based on our calculations, we think that SoftBank could invest up to $40 billion before breaching S&P's downgrade trigger for the double B plus rating. And this is based on the current valuations for its key listed stocks. But ultimately, SoftBank's rating headroom really depends on its portfolio valuation. Specifically, as Chris mentioned, a large part of the portfolio comes from ARM shares, and the shares price can be pretty volatile. Now, the last time that SoftBank was in an offense mode was actually back in fiscal end of March 2022, when it invested over $40 billion in 1 year, mainly through the Vision Fund arm. Now, this coincided with a tech stock rout and led to a spike in loan to value. SoftBank did demonstrate a commitment to managing its loan to value below the 25% reported level by monetizing some of its stake in Alibaba. But despite this, the company ended up getting downgraded to double B. So we do have some concerns that SoftBank could face a similar risk this time around. It is investing aggressively at a time when we've seen the Nasdaq index double over the last 2 years. So the company could get caught out with lower rating buffer if the market turns.
Sure, that makes sense. I guess it bridges equity and credit at the same time, in that specific nature. And the other thing, I guess, and this is for you, Chris. There's big numbers being thrown around, and I think was it 500 billion over 4 years, for the Stargate project in the U.S. What do you make of it?
Well, from SoftBank's stake in the $500 billion Stargate project, actually aligns with its belief that bigger is better when it comes to AI. But this contrasts with the rising popularity of small and efficient LLMs. And we believe Stargate's data center investment plan in at least 16 states might face weaker than expected utilization. And we think the risk of overcapacity could heighten in light of spending sprees also by other US tech giants. In fact, Meta, Amazon, Alphabet, and Microsoft plan to invest $320 billion in AI and data center build out in 2025. That's up 39% from last year. Another aspect to consider is US power shortages. This could be the first challenge that Stargate needs to solve before securing demand for its enormous planned data center capacity. Otherwise, returns on its intended $500 billion of investment in AI infrastructure may be disappointing. In fact, with over 5,300 data centers, the US has the most data center sites globally, but it might struggle to meet rising electricity demand. A problem is its power grid connection backlog, which has so far kept electricity relatively flattish. That's about 4,000 terawatt hours in the past 2 decades. It's also worth noting that the Trump administration has so far shed no light on how it plans to boost US electricity supply.
Sharon, I guess taking that big number for capex, taking that risk for disappointing returns, what should a cautious bond investor, be on the lookout for?
So I might be pointing out the obvious here, but actually the amount and pace of investments from SoftBank, they're key to watch. We've seen numbers reported in the press, like the $500 billion Stargate investment that you've talked about. But the company hasn't actually announced anything concrete in terms of what they are going to deploy from their balance sheet. In its latest earnings call, SoftBank said that the plan is to use project finance to fund Stargate, with equity only contributing 10 to 20%. Now, this would then lower SoftBank's contribution to less than $10 billion for Stargate's initial $100 billion investment. But obviously, there's still another $400 billion in the pipeline. So that's something to watch. OpenAI is also a lead investor in Stargate, and it could raise funds for its portion of the investment. And SoftBank has invested $2 billion in OpenAI in the past 6 months, and there has been reports that it could look to invest more. Now, one question I get asked a lot is around SoftBank's funding sources. As I said earlier, I think SoftBank is likely to borrow more. The company is an active bond issuer and it has $46 billion of total bonds outstanding right now. For this year, we expect the company to refinance $6 billion of bonds, which are coming due, and potentially issue more to fund investments. It does have good access to a yen bond market, but we expect issuance in other hard currencies as well, given that the investments are primarily in the US. SoftBank also has unpledged shares in its portfolio, which can be used to raise funds. And it recently upsized its ARM backed margin loans by $5 billion. SoftBank's stake in ARM is currently worth over $140 billion. And even though we expect the company would want to maintain control of ARM, potential asset monetization could raise funds and also help to keep LTV under control, although it could weaken SoftBank's portfolio quality.
Perfect. That's quite a lot of levers to pull in a way. Chris, Sharon, thank you so much for this. To all of those watching us, a quick reminder that you can follow the detailed work from our analysts in their bio page on the terminal. You can find those bio page details under their names now on the video. And finally, and very importantly, if you have a Bloomberg Terminal, you have all of Bloomberg Intelligence. So feel free to reach out and ping us an IB to keep the conversation going. Thank you, and I'll see you again next time.